Okay, good afternoon. I'm sure our YouTube guests, you're just joining us. Thank you very much for being patient. We've been online via Instagram for those that are just joining us, and I have Amir backstage. I'm having bringing him on stage via YouTube and Facebook. Hi, Amir. You can also please connect via Facebook, sorry, via Instagram through the medium that we're using before. Please stay on Instagram and also on YouTube. Thank you. Amir, can you hear us?
Yeah,
Yes,
hi,
I can hear
Wura.
you.
Can you hear
Please
me?
turn on your camera on
Okay.
Instagram as well. Yes,
Okay, on Instagram
please
as
turn
well.
it on Instagram. Your camera is off on
Okay.
Instagram, so please turn it on so that we can go back into the discussion. Okay, please just give our host, I guess, a couple of seconds to figure it out. On both of them, Amir, you went offline on the link. But anyways, thank you for joining us back. Okay, thank you so much. So we're streaming now via our Facebook and our YouTube and our Instagram. So for those that did not join us early, we started discussing about our global markets. We're talking about the local economy. So I want Amir to just take from the local economy again. I mean, we started talking about the 3.3% before we had to take a short break. What do you think is the financial burden that can be on businesses that we discussed in the emerging markets? I mean, and what is the silver lining?
Okay. So yeah, there is significant financial burden on businesses at the moment, right? We've already touched on how high the monetary policy rate is at 27.5%. It's simply too high for businesses to borrow at, because as a business or as an individual, if you're trying to borrow, you end up borrowing at say roughly 30%. If you borrow today at 30%, within the next 10 years, you would have paid three times what you borrowed as
Okay.
cost of borrowing. So simply as interest, not to even talk of paying back the 100 million that you borrowed. So that environment is too tough for businesses to expand. But at the same time, my silver lining, what I believe will pan out is that interest rates will begin to decline in the second half
Okay.
of 2025. We expect interest rates to settle roughly around 24 to 25% by the end of the year. This we believe would help ease borrowing costs as well as support economic
All right.
activities in the
That'll
country.
be interesting. But I mean, tell us more. Tell us more about it.
Okay, so for this
Yeah.
lower interest rates, right? We believe it all ties back to our focus for inflation. We believe inflation is also about to decline, right? We've already touched on that. We discussed earlier on disinflation. We believe inflation is about to
Okay.
slow in the market, simply because of you could say high base effects as well as stable oil prices, right? Bringing it down to, we expect inflation coming down to roughly say
Okay.
30% by the year end, possibly give or take even sub
Okay.
30% levels.
That'll be fantastic. But what is driving this change? Lower interest rates. I mean, it would be fantastic to hear. But what actually is driving this change?
Okay, so yeah, as I already touched on that, the lower interest rates will mostly be driven by the lower inflation rate, right? As rise in price level begin to
Okay.
moderate, we believe that should give the Monetary Policy Committee a positive sign that the economy is not heating up again, and they can begin to cut interest rates so that they will stimulate economic activity
Okay.
in the country.
I mean, I'm seeing an interesting conversation here. People want to learn more. And we're already getting a couple of questions, so you would have questions to answer. You talked about, if I remember very well, from what you just said now, you mentioned something around high base effects. So can you remind me? I mean, for a non finance person, for in a layman language, what does that actually mean?
Okay, I mean, of course. High base effect is essentially when price increases rather
Okay.
look smaller because they are measured against a previous period of very
Okay.
high prices. Inflation slows, but prices aren't necessarily
Okay.
dropping. They are just not rising as fast as they were rising in the past.
I think I understand now, and I think people in our audience should be able to understand. So yeah, thank you. Lower inflation rates, lower interest rates. I mean, that sounds like good news. What about the naira? Are we expecting it to strengthen, please? I want to hear good things. Are we expecting it to strengthen in 2025? It would be good to know that our naira is performing well in 2025.
Well, not quite really. For the naira, we forecast it weakening marginally, though not by
Okay.
large margin. We expect it to weaken marginally to roughly around 2,000 naira to a
Really?
dollar by the end of 2025.
You're not giving me good news, though. I mean, that's not even what I'm expecting to hear. It doesn't sound like good news, Amir.
Okay, it's not all bad, Wura, right? This depreciation
Hmm.
in the naira, it would not significantly worsen
Okay.
inflation, really. And I mean, while imported goods might cost a bit
Okay.
more, yes, yes, including those designer shoes that you love, they might end up costing a
Okay.
bit more, but it shouldn't really heavily impact the average
Mm.
consumer
I'm
honestly.
not sure about that. I mean, we're putting a, I mean, you're calling me out here, it's fine, but please, um, let's talk about it. Are you sure it's not going to affect the general consumer? Let's talk about the financial markets. Sincerely, I mean, last year the Nigerian exchange gave us a stellar performance of over 37% in returns. What about this year? Do you think you'll be able to match that?
Well, for 2025, we are projecting returns in the range of 30%,
Okay.
give or take. I mean, we expect positive sentiments in sectors like banking, oil and gas, as well as
Okay.
telecommunications to lead the charge for this growth. These sectors I expect to perform well based on economic reforms that we've seen, that we expect to positively affect
Okay. So
these
what's driving
sectors.
this growth exactly?
Well, several factors really. First, there is the government reforms that we just mentioned, right? We expect that to create positive sentiment. So, for instance, in banking, when you look at banking, the last time we were here, we touched a bit about the banking
Okay.
recapitalization. We expect that to continue to play a huge part in
Okay.
2025. Although for 2025, we expect most banking players to have concluded on their recapitalization exercise before the year runs out. I mean, we've already started seeing some players concluding their recapitalization exercise even in
Okay.
2024. Now, talk to your Jais Bank, talk to your Access Bank. They've already completed this exercise. We expect other
Okay.
players to follow in
Okay.
2025. This will help strengthen the sector and also improve sentiment, leading more investors to buy into tickers in that sector. But aside that, there is also the oil and gas, right? In the oil and gas, uh, government policies has led to exit of international oil
All
companies
right.
from Nigeria, and this has allowed some local players to acquire lucrative assets from these IOCs that are leaving the country, and this will drive growth for those businesses. I mean, simply from those acquisitions, we've seen the oil and gas sector index in the market gaining over 100% in
Okay.
2024. We expect some stellar performance from the oil and gas sector this year as well, mostly on the back of the fact that following this acquisition, there is expected drive for synergy,
All
right?
right.
These businesses will from the assets that they acquire, they'll be able to drive synergy, improve efficiency in their operations, and and all that, and that should lead to better
Okay.
financial performance and attract investors into the sector. And when you move away from the oil and gas, you also look at telecoms, right? We've already had the news that there is an imminent tariff hike. We expect that to lead to improved profitability for telecom players, even though the government has alluded to the fact that although there will be a rate hike, but they are still in consultation to ensure that any rate hike does not unnecessarily put too much burden on consumers like you and I. So the government is trying its best to ensure that it doesn't unnecessarily lead to higher data costs as well as price of calls
Okay,
for you
interesting.
and
So it
I.
looks like equities is the place to be. I mean, for 2025.
Well, exactly. So when the prices of your shoes go up, your portfolio will cushion the
Okay,
blow.
no problem. Touche. Okay, so moving from equities, let's talk about the fixed income markets. Are those, I mean, the fixed income funds, are those still going to be very attractive for 2025? I mean, they've been performing averagely for years before now. So, what's your feedback on 20? What's your feedback? Sorry, on the fixed income funds for 2025?
Well, when you look at the fixed income markets, right, our expectation is that fixed income yields will decline in 2025. This is mostly coming on the back of the fact that we expect cut in interest rates, right? But then again, even this decline in yield is not something drastic. We still
Okay.
expect yields to remain, you could say, decent. We are forecasting, for instance, average sukuk yields across all efficient sukuk instruments in the market to stand at roughly around 20%
Okay,
by the
so
end
that's
of the
pretty
year.
strong. I mean, pretty solid for the fixed income, don't you think?
Mm. Yeah, I believe the return is you could say so fair. I mean, fixed income is great for risk averse investors, right? Who want steady returns, and even we have a fund dedicated to such investors. That's Lotus
Oh
Halal
yeah,
Fixed Income Fund.
I was even going to get to that, Amir. So, the last time you were here, which was 6 months ago, and it's still very amazing because it feels like just a few weeks ago, you discussed and you were very strongly
Exactly.
recommending mutual funds. So, does your advice does it still hold in 2025?
Oh, 100%. And in fact, I would say that advice actually paid
Oh,
off
okay,
handsomely in
that's amazing.
2024. So when you look at, for instance, the Lotus mutual funds, all our mutual funds in 2024 recorded improved return. So the return of the funds were better in 2024 than they were in 2023. And we expect even better outing for these funds in
Okay.
2025. So, for instance, the Lotus Halal Equity ETF in the period in 2024 returned nearly
All right.
47% to investors, while the Halal Investment Fund also delivered very good return, over 31%. What this means essentially is that if, for instance, you invested 100,000 naira in the Lotus Halal ETF at the
Okay.
beginning of the year, uh, you would have been left with 147,000
Mm.
naira at the end of the year. To me,
So
by any magnitude,
I think I
that
want
is
to,
a very good
yes, I want to
performance,
cut you
right?
short, and I mean like a round of applause to our investment team
That-
and the team at Lotus Capital. I mean a whole 47% return on a non-interest finance fund is an amazing way to show that the fund is actually performing in 2020, and that fund performed very well in 2024. So please go on again. Let me see that.
Yes, exactly. So, I mean, that's for the
Yeah.
two funds, right? But even our fixed income fund, that is, we will say risk
Yeah.
averse, low risk, pays regular income. Even for that fund, the fund returned over
Oh,
fifteen
okay.
percent to investors in 2024, and as a result of this return, we even ended up growing our dividend payout. That's our
Yeah.
annual dividend payout by 36%, over
Very
36% rather, in 2024. That's when you compare our payouts for 2023. And we expect that to even
okay.
improve further for
Okay,
2025.
interesting. Again, big ups to the team at Lotus Capital. I mean, it's incredible. So this means you're saying that mutual funds are still a very good, a very valid option for investment in 2025, right?
Oh, absolutely, absolutely, without a doubt. Mutual funds are excellent for both
Okay.
wealth preservation as well as
Okay.
capital appreciation, right? Especially in a high inflation environment like
Okay.
ours, really.
Thank you, Amir. I mean, you've given us a lot to think about, but I have a couple of questions here. I think I have about two questions, so please just hold a second while I read them out. Yusra was, I hope I'm not murdering your name. She asked the question here. She said, "Can you shed more light on GDP and CPI and how it will inflect the Islamic financial instruments, if you can?"
Okay, so quite all right. We've already touched on our projection for the economy, right? We expect the economy to grow by
Okay.
3.3%. I mean, Islamic finance products or no interest finance, as we like
Yeah.
to call them in Nigeria, are not exempt from the economy. Whatever is affecting the economy, whatever is also affecting inclusive conventional finance would also in a
Okay.
way affect us. So with slower growth rates, with high inflation, high interest rates, what that would mean for no-interest finance is that even for financing products, so for instance, look back to your fixed
Yeah.
income instruments now. More issuers in the Islamic finance end would also be skeptical at the moment, just as they are in
Okay.
conventional finance, to issue longer dated instruments. And we've
Okay.
already started seeing that. More issuers are more tuned towards issuing
Okay.
short term instruments. Now, think of your no interest commercial papers. This is to finance their operations because with the expectation that interest rates will
Okay.
start to slow, it makes more sense,
Yeah.
right, for a business. If I expect interest rates in say a couple of months will start to slow, and I'll be able to finance my business at a lower cost. I will not want to tie myself down at a high
Okay.
rate at the moment. So we've already started seeing a movement towards that direction. And yeah, with inflation beginning to slow, our expectation is sometime in, you could say, end of the first half, early second half of the year, inflation will begin to slow. And once we see that beginning to happen, that will give more confidence to the Monetary Policy Committee, right, to start cutting rates. And once that happens, we believe, even for the non-interest finance angle of finance, we believe it should help improve
All
market
right,
activity
thank you
in the
very
end.
much. I have a kind comment here on YouTube, and it says, "Congratulations on the high dividend return." I think I just had to mention that. I have another question.
Thank you.
Yeah. Thank you. To, Scribes of Zion. I'm hoping again that I mentioned it right. So he gave them a remark on a comment of yours. It says stability in energy sector. Could you please expound on that? So that's question number one. So do you want to take that now? I think that's with
Okay.
yeah.
So, yeah. So, with regards to stability in the oil sector, right? I mean, we've already talked a bit about expected increased output
Okay.
from the US. But then again, even with increased output from the US, we expect uh, uh, you'll see economic growth in countries like India and China to take up much of that output. So that would mean even though supply is increasing, demand is also increasing at the same time, right? And it will even out. So with that, we expect in dollar terms, crude oil to still remain relatively around
Okay.
$80 per barrel in 2025. Yeah, and since the naira, we're not also expecting say drastic depreciation in the naira. The depreciation that we're expecting
Mm-hmm.
is just marginal. We expect uh, the petrol that you pay for to fuel your car. We expect a bit
Okay.
of stability with regards to that. We do not expect to see, say, petrol prices, pump prices, skyrocketing to say 1,500 naira. No, we still expect pump prices to remain relatively stable at
That
where
would be
they are
good.
at the
Yeah.
moment. And hopefully, if even say our local refineries are able to gain more efficiency in their operations, it's also even possible that we'll see further decline in the
Okay.
import price
Amazing. Thank you.
of petrol.
It has another question and it says, aside from the petroleum industry, what other energy sector do you think will be a really good future for Nigeria and Africa as a whole? I mean, we're talking about 2025 economic outlook, so it's good to know what other sector can make. So answer the question.
Okay, so I mean, when you look at things from a global end,
Yeah.
right? At the moment, there is a lot of interest around renewable energy outside Nigeria. In Nigeria, there hasn't been, you would say, as much investment, as much focus in renewable energy. Uh, and I mean, additionally, when you look at, for instance, our main focus here is the stock market, right? And when you look at the stock market, aside oil and gas players, there aren't really much energy players that are participating in the oil and gas sector. Even those energy players that are uh, in the Nigerian market, those that are involved in other energy activities, right? Their primary operations are oil and gas. Now, think back to, for instance, your
Okay.
Aradel and the likes. So we expect, yeah, much of the growth in the energy sector should still come from oil and gas sector. But then again, because of reforms that we're also seeing in, say, for instance, the
Mm.
electricity sector, that could help also bring about some improvement. Though we don't have any, you'll say, electricity player. Publicly quoted in the market. We don't have a major either transmission company or a disco listed on the market, and we've not seen indication of any coming to the market at the moment. But then again, with regards to pure market activity, that's from the macroeconomic aspect, we believe increased efficiency from these guys as well as a supportive regulatory environment, as we've started seeing already, should also help bring about
All right,
improved growth in that
that
sector.
would be amazing to see. Thank you so much. You've given us a lot to think about, to know about, to learn about. For those that joined us on a later part, you'll be able to rewatch this whole session on our Instagram and the full version as well on our YouTube pages. Thank you, Amir, for your brilliant insight. Um, we hope that we'll see you again, and maybe not too far, like 6 months ago. Again.
Always a pleasure, Aura, and thank you to our listeners
Thank
for
you.
staying with us. And yeah, hopefully we should meet
All
again
right.
soon, not in July,
Thank you. Thank
before
you. That would be
July. Yeah.
amazing. To our audience, for those who have not received or um, who do not have copies of our 2025 economic market outlook, you can reach out to your relationship managers or to us via social media, and we'll share it with you. And for those who do not even have an account with us, what are you waiting for? Send us a DM, send an email to info@lotuscapitallimited.com. Take the knowledge that you've gained today and use it for your financial future. Use it to make concrete decisions with regards to your financial future. Thank you so much for everyone for joining us. It's been about 40 minutes thereabouts of financial intelligence. So thank you again. And we have no more questions here. So till we'll see you next time. Bye everyone. This is it from Lucy Capital.
All right.
Bye everyone.
All right. Bye,
Thank
everyone.
you.
Thank you.